Did you click it? All right.
Hello and welcome to the AI Revolution, the weekly, most weekly call, most Mondays at 3 p.m., 5 p.m. Eastern, 3 p.m. Mountain Time, where I am right now. We do a call with one of the foremost one of the longest running workers in AI. Is that more comfortable to you?
One of the most hyperbolic MCs, Cody.
That's how I got my own show on Fox, dude. Like hyperbole sells.
Yeah.
So no. Answer the question though.
Answer the question.
Do you know anyone who has worked in AI longer than you? You're at almost 30 years working and getting a paycheck doing AI related work.
Yeah, no one that's not retired.
Okay.
All right. Well, then say a lot. I mean, okay, a long time just means it took me a long time to figure it out. But
but the good news is you've got it figured out. I'm Cody Willard. That's Bryce Smith. John Dio is the man upon whom we depend to teach us AI stuff. Bryce and I study AI all day, every day, some days.
I like to think of it a little differently. Like I'm not sitting here and they pepper me with questions, although that happens sometimes. But is that we've got each our own different perspective on it. You guys are working at it from a certain angle. Like you guys are going and making the fruits of the labor of AI kind of like you go. It helps when you go write a book or when you go put together a podcast or you kind of using AI. And I'm like developing with AI. And I think I mentioned something and therefore
some of the lessons that John has taught us and that we have otherwise learned is actually in our book, like John just called it out, How to Invest in the AI Revolution. We make a lot more money if any one of our AI stocks goes up 82 cents than we do selling AI books, by the way.
Yeah.
So we sold a lot of the Ultimate Tesla book, which also talks about Tesla's AI strategies, some of which we learned from John, others that we learned on our own researching. But even that doesn't really move the needle for Trading with Cody or 10,000 Days Fund. At any rate, let's talk AI revolution. Let's jump in. Enough of the bullshit. Look, I was just on the phone with one of the smartest non-John D. Oliveira, non-Bryce Smith people I know. I qualify it like that because you two are right up there. But my buddy Zach runs a hedge fund, and he's gotten bearish on NVIDIA here. John, he thinks we're going to talk to him tomorrow offline a little bit, and we'll, summarize and sort of go over some of that next week on the Monday call about the AI revolution here. But in the meantime, I think I want to bring it up. Like, John, his big concern is that we really have hit a lull and that LLMs are boring. They need more data. They're making up data. Hold on. I'm tired of getting this question every week during the AI call. I'm just going to not get done with this question real quick. Thank you for watching Scoop. I think you've asked this question every week for 3 or 4 weeks in a row. Let me be blunt. All right. Look, I'll be frank as always. I always try to be as transparent as possible. I'm embarrassed that I don't own Rocket Lab anymore, dude. All right. It sucks. I sold that thing at like $4 or $5. It's like one of the dumbest things I've done in years. No bigger believer in the space revolution than this guy. SpaceX is by far our largest position in the space revolution. It's one of the 3 largest positions in the hedge fund. I think it's a much better company than Rocket Lab. I think Rocket Lab will be fine. I think it will survive. I don't know that it's going to stay at the $25 level or even be here in 3 or 5 years. The way I would put it in context is this. SpaceX is worth $255 billion as they're doing the secondary that they're doing for employees right now so they can get some liquidity. Rocket Lab is worth about $10 billion right now. SpaceX has working spaceships, starships, not quite starships. They have working spaceships, the Falcons, going and taking human beings into space, into orbit, delivering people and supplies to the ISS, sending up 42 to 51 satellites, Starlink satellites every week. Starlink itself has got 5 million paying subscribers, doing 6 billion or more in revenue right now. I think SpaceX is undervalued at 25 billion. I think Rocket Lab might be overvalued at 10 billion. One of those two things are mispriced. SpaceX is worth more than 25 times Rocket Lab. So I don't know what else to tell you, Scoop. You've been asking me this every week. I don't own Rocket Lab right now. I don't have any positions in it.
But clearly you can say something intelligent about it, and you just did. So I don't know why you didn't say so weeks ago. We're not
because this is the AI call, and
this is about your customer.
Ask me on Wednesdays when we do the space call.
And now, Scoop,
and maybe he did. Anyway, Scoop, I do appreciate you watching, and I'm teasing mostly, but I see your question here again today, and I was like, let's nip it in the bud. Now let's get back to space.
No, wait, I have a question while you're on it. A thing you mentioned about SpaceX. Are they going to be involved in some kind of like putting up another space station? I just heard a little bit about.
There's a company called Axiom that we are also investors in, full disclosure. It's a privately held company worth several billion, probably 2 or 3 billion. And their plans are to use SpaceX to get back in. Oh, rock on, Scoop. Rock on. Axiom's plans are to use SpaceX to get back and forth with human beings and equipment and supplies to build a new space station out, like basically like Legos, like build it on the end of the existing space station as it gets decommissioned by NASA over the next, say, 2 to 3 years. The plan is somewhere in the next 3 to 5 years, Axiom would have its own space station up there circulating. It would be incredible if they pull that off. Let's just be real, though. There's been articles, I think, in the Information and elsewhere talking about how Axiom itself is having some problems with cash and trying to figure out how to get to where they need to be to do all of the dreamy big things they're planning to do. John, yes, there will be more than one space station within 5 years, within 10 years. There will be hotels, there will be factories.
It just seems like it should be child's play now compared to when they first went and did it. Now that you can have the kind of payload of a starship and stuff.
I mean, I would agree with you, except for the fact that we still haven't gotten back to the moon, and somehow we did that.
I think that's another thing is that I know we get off this topic, but that I go, what's the rush to Mars? Just because somebody said, let's go to Mars? Because the moon seems like you could set up more easily than Mars. Does Mars have better anything?
Yes, much better potential to survive a nuclear bomb or an asteroid hitting planet Earth.
Most things asteroid is really, I'll say, far-fetched. It can certainly happen, but the odds on it are very, very low. Yes, it'll happen. Maybe it'll be in the next million years, and that'll be soon. But the nuclear thing would most likely just get Earth, not the moon.
Right. No, it's really about asteroids or something else blowing up planet Earth and making sure we have.
That's not a good reason to avoid. It's too easy.
How close it is. Beyond that, like John, you got to dream big. The moon's been done.
The moon has not had a permanent colony.
Yeah, well, okay, we'll get that done first.
Just get that done, will you?
We'll have human beings living on Earth within the next on the moon within the next 5 years. And 5 years after that, the plan is to have people on Mars. It's a much bigger deal to get to Mars. And if you can get to Mars, that means we can get human beings outside of the solar system and eventually start doing other multi-planetary, multi-solar system kind of ideas.
Why does getting to Mars mean you can get out of the solar system?
Because that's a hell of a lot farther.
No, it's not very far.
It's a lot farther than the moon. If you can get to Mars, you could put people to sleep and let them be cryogenically asleep for 10 years and then wake up and they're like Sirius XM star.
Yeah.
Okay. That's called the Sirius star. That was a joke about Sirius XM. Yeah. Can we please get on the AI revolution?
Going to sleep is sci-fi. Yes. All right.
So is the AI revolution. We're living in a freaking sci-fi simulation. Like this, none of this is real. They have a starship that literally is taller than the Statue of Liberty go into space and hit an orbit last week.
And my favorite quote now people say all the time is, wow, we're in the best timeline.
We are the best timeline. That's a good way of saying it. The AI revolution. John, I'd like to discuss whether or not these LLMs have any advancement. We were promised Chat-GPT 5.
And we got GPT, we got 01. I mean, you could say change the name on it. So, I mean,
no, they didn't change the name. They rolled out a junior version of 5 and called it
not
4.0.
junior. It's a different kind of thing. Here's the thing about that different kind of thing. It uses the processors differently. Back to the NVIDIA point. If I were bearish on NVIDIA, it wouldn't be because LLM activity is slowing down. And Zach better not be watching, because then it's like, oh, we're going to say it all today. But it is like, I would be more thinking about are there margins public info? Like, yeah,
the margins have gone from 50%, 40% 3 years ago to 50% to 60%. Now we're at 75%.
Yeah. So I think what could happen is the margins could start to come down on NVIDIA again, because I'm already seeing competitors of theirs having processors that, that say, okay, so what you want to do is do fast processing through of a language model. You want a transformer architecture to flow through a chip. Oh, okay, so we'll make one of those. And so by having the
ASICs,
chip that is
call them ASICs, like specialized chips, right? I mean, that's really what
by having the chip that is special built for that, versus going, we have all of NVIDIA's brilliance over time. Now take that back a little, because of, as you talked about, the CUDA stuff, and like, do you have all of the?
It's an ecosystem at NVIDIA. When you buy an NVIDIA Blackwell server, a bunch of NVIDIA Blackwell servers, or before that, when you bought the H100 chips from NVIDIA, it was a not quite turnkey. Maybe Blackwell's almost turnkey, but it's closer to turnkey. It's like a full system. It's like you have software, you can write to the code, you can easily interact with the AI chips, but that's part of what I think you're hitting on the right theme that Zach is worried about. More than the commoditization and the LLM's lack of advancement, it's that you're seeing like Amazon come up with this, what is it, the Inferium and the Trainium chips, and they just gave $4 billion to Anthropic, which will then give that $4 billion back to Amazon in the form of revenues, as Anthropic is paying Amazon Web Services to provide the cloud and the access to these chips. Laundering. But the point being that Inferium and Trainium, I think I'm messing up the two chips from Amazon that do inference and training are, at least in Amazon's mind, ready for prime time, ready to compete full on, and hopefully they can make Anthropic continue to advance, create better LLMs on Amazon designed chips, not NVIDIA chips.
I mean, put simply, they'll have competition, and they haven't had really competition, See,
and I don't think they're going to have the competition. I'm surprised that is the biggest concern right now. I'm not really surprised. Everybody's always worried about competitive threats, but it feels, Bryce and I, not just feels, it's not about feeling, it's about thinking and analyzing. And when we analyze NVIDIA and AI, it seems clear to us that there's still this like frenzy to try to get their hands on NVIDIA chips in the AI industry.
Is Blackwell actually out yet?
Yeah. They sold, what was it, over $1 billion this quarter?
They sold them. Are people using them? I thought they were still backed up on.
No, they're being put into systems right now. Bryce, you're more up to date on this stuff than I am.
Yeah, no, they're shipping. I don't know that anybody's training on Blackwell just yet, but the units themselves are shipping, and they're being stood up in data centers.
Yeah. So, and what do you see as? Tell me a X multiple in Y years that you're predicting for NVIDIA. What do you see it as?
So Bryce did some great analysis today at tradingwithcody.com for our subscribers. And he outlined that if NVIDIA can grow top line 20% per year for the next 5 years, and they maintain the current gross margins, and we have to make some assumptions about operating margins, but we go through and we run the model, that there's potentially $250 billion of net profit to be kicked out of NVIDIA in the year 2030. 250 billion, throw a 20 multiple on it. That would be a $5 billion market cap. I think Bryce threw a
$5 trillion.
I'm sorry, $5 trillion market cap. And that would be a 40+% gain from here. Now that's 5 years, 40% plus gain. It's like 6% annualized. That's not very exciting. It needs to be more than that for NVIDIA to actually be a good investment from these levels. But in order to at least sustain this price, that's more than enough. If those assumptions are right. I mean, that's the question, right? Of 20% annualized revenue growth. Well, shit, man. Like,
is that reasonable? $200 billion base? You know, it's large. Right. It's large.
And to give it more perspective, like when I bought NVIDIA in 2016, initially revenues were like 30 billion a year.
Yeah.
Last year they were like 50 billion a year.
This quarter, NVIDIA generated more in net income than they did in revenue in the last year's quarter, the same quarter. They generated more in profit.
And that's why the stock is obvious. I mean, that's obviously the biggest contributor to that stock's performance is that the fundamentals themselves have been amazing. Margins have gone through the roof. Revenues have gone on a tear from a very high level to begin with and have exploded higher. And it's an incredible opportunity. It was an incredible opportunity. Now the question is it still?
Tell me one other thing, which is how much of do you know about their installed base and whether their installed base has demand itself that's growing at X% as compared to how much they have to grow into new areas?
That's the whole, okay. Two different things there. The installed base, the main, like Amazon, Microsoft was probably almost 20% of NVIDIA's revenue last quarter. And all like the major Meta, Google, Amazon, Microsoft, and XAI, maybe throw Tesla in there too.
And Oracle.
But would Oracle move the needle yet? I mean, Oracle's probably 2 or 3%. And these other ones are bigger, but yeah, throw Oracle in there. Those are 7 major customers. I mean, those 7 customers probably account for 95% of the revenue growth from the $50 billion previous.
Yeah, and so those 90% do they have demands for themselves?
That goes back to what I started the question off. Are these LLMs commoditized and not advancing enough that Coca-Cola is going to actually be willing to spend $8 billion on AI stuff, and therefore Microsoft and Amazon justify all this billions of dollars they've spent on NVIDIA chips? And
I wonder the year over year
problem, John, is the customers of NVIDIA actually demanding more AI?
Well, let's stick to the customers for a second, as opposed to the customers of the customers, and take like your Microsoft, your OpenAI, etc. And like they at least claim to have the plan to double their kind of processing that they're going to go after. It makes me start to wonder whether the bottleneck is actually the electricity. If you talk about 20% growth over 5 years and you're like, okay, so now we're, doubling what these things require electricity wise.
I don't know. I may push back on that. It's a good question, but they're getting more and more efficient. That's the whole reason Amazon's Ethereum and Trainium chips are better than NVIDIA chips, at least on a per energy unit basis. Like that is the assumption that the NVIDIA AI chips 5 years from now will consume more energy than the Blackwell. I don't know if that's true. Even if you put 10 times more processing power, it might be less electricity because they're going to get more efficient.
Well, they're not going to get so much more efficient typically to move backwards in electricity usage. It's just more like, oh, that chip is now twice as powerful, but only 80% increase on electricity. You know, it's
why do you? I don't think that's a good assumption. I think it is possible that they could go backwards on energy consumption.
I'm looking at even other types of chips that have been out there, and they've definitely seen decrease.
Yeah, but there's a moment in time. Here's what I'm getting at. I don't think it would, if you asked Amazon and Microsoft and NVIDIA if energy is a bottleneck, maybe not the bottleneck, they would all agree. I mean, I think Wall Street itself is all in. I mean, utilities have gone up 50% this year, the most boring stayed part of the market, because people recognize that if AI continues scaling, if spending on AI continues scaling at the way it is, energy already is a bottleneck.
Somebody like Microsoft bought 3 Mile Island or something. It's like you have they're trying to go and start making other, reactors and things.
Right. But that's, again, I think everybody's recognizing that, but it almost feels like a bubble on that. Like everybody's like, it's going to happen. That the utilities never, like the CEOs at utilities, they're not risk takers. They're not innovators. They're bureaucrats. They go to the government and they're like, hey, can we charge more for electricity? We'll build some more plants. Like, that's all they do.
But is the disruption there that it's not even up to them, that it's the crossover to where these companies like the Microsoft start getting in the energy business in a way?
All right. Well, and so these are great questions. I'm glad we're actually going down this pathway. For example, in what's the town? Is it Berlin, Bryce, where Meta has built that giant?
Yeah, Las Lunas.
Las Lunas. I always get those two towns confused. They're the same. But Las Lunas, just outside of Albuquerque, has, what do you think, Bryce? Probably 500 acres of solar panels that they've built in the last year, and that's powering their local data center. We don't even know if there's AI in that data center yet. I'm not sure they're running any NVIDIA chips out here in New Mexico, but they've clearly invested billions of dollars in this solar field to power their AI, their data center in general. Bryce, correct?
Yeah, I was just agreeing with you. I guess back to your kind of original thing, though. My opinion, I do think that the numbers are there to support the spending from the NVIDIA customers, because it's not like their revenues haven't grown, and in fact, the cloud revenues at all of the hyperscalers have grown significantly. Microsoft's Azure cloud grew over 30%. Google's cloud grew like 35%, and Amazon grew 20% year over year. So that's really substantial growth off of a big base, at least for Amazon already. And they're looking out at least over the next, say, 3 to 5 years, at the payback on these NVIDIA chips, and they think that the demand's there. So I think if you're bearish on NVIDIA over the next 5 years, you have to believe that Amazon, Meta, Microsoft, Amazon, Tesla, XAI, Oracle, and every other hyperscaler on the planet is dead wrong about the demand for AI over the next 5 years, and they're just wasting money.
Provide a little context. How much have CapEx at Microsoft, at those companies, gone up? Revenues at the cloud business that is using the stuff that the CapEx is buying went up 30% across the board. Let's just call it that.
Okay.
But CapEx itself went up about 120% year over year.
Yeah, at least doubled, I think.
Yeah. And so now then, what can you, off the top of your head, I'm not sure you can do this. This is a high bar, but what does Amazon spend on CapEx, or Microsoft, any of them? What do they spend this quarter on CapEx, and what are the revenues of the cloud business?
Amazon was $25 billion on CapEx, and I just wrote about Amazon, so let me just see if I have the figure here.
You did. You had it in. I don't know if you said the actual number.
$22 billion on CapEx. Their operating profits on the cloud business were 60% of their overall profits. Let's call it $11 billion or something like that. So $11 billion in operating income and $22 billion in CapEx. I mean, that gives you some idea.
All right, but the order of magnitude makes sense. And so, I mean, John, that's the crux of the problem, right? That the spend has gone up 120%. The revenues from that spend have gone up 30%.
Yeah, but you monetize that spend over the 5 year.
5 years.
5 years, yeah.
5 years.
So it's not like apples to apples there.
Right. Okay. So let's say they got an extra $2 billion of operating income from the cloud business, partly because of AI, that they otherwise wouldn't have gotten. So 22 billion, that's a 10-year payback period. That's just one quarter though. So 8 billion. So yeah, I mean, those numbers would work if it's a less than 5-year payback period. Then you're going to invest all day, every day on NVIDIA chips.
Well, you said though, what about the fact that it's sort of already at the level, like it might be a hold as opposed to a buy?
Yeah. Actually, I would agree with that. Like, I don't know that NVIDIA is a sell. I don't know. I certainly am not buying it right here, but
yeah,
I mean,
yeah, I think you're more like where it can either get, above a certain, it's not going to be going negative. It might not make quite as much as you were hoping, but it should do okay.
Yeah, we're not going to have another 200% year on NVIDIA next year.
And the multiple can contract as always, right? Like you might not get a 20 price to profits ratio. It could get a 15 or a 10, that's always possible. And that's just the nature of equity markets.
Yeah. I mean, and that's the problem with like Apple right now, while we're on the topic, that Apple when I bought Apple in 2003, it was not profitable, but within about 3 or 4 years, it was outright profitable, and it was trading at 10 times to maybe 12 times earnings every year. That's all it ever got to. Maybe on the highest, best rally it ever had, it was 15 times earnings. And right now, it's 30 times earnings. So the market is making a lot of growth assumptions that AI is really going to be profitable for Apple. And Apple, like NVIDIA, I'm not sure it's a sell, but it's not a buy.
Well, this is where I'm saying, like, when you think about your portfolio of 15 or 17 or whatever things that that you have in the Revolution portfolio or something, how do you kind of distinguish between these very large, safe, everyone knows they're great companies versus finding the ones that haven't already grown that much and are going to be having higher multiples of growth starting now, things that you find that others don't know about yet?
John, you do a great job of getting to the crux of managing our portfolio. This is about the third week in a row when you start drilling down, asking us questions, how do we construct it, that you're on the right track. That's what we spend our life doing. And we've been in Apple since 2003. We've been in Meta since a month after it came public, Google the day it came public, Bitcoin for 2013. We've been in 7 out of I call it the Mag 9 instead of the Mag 7, because I include Taiwan Semiconductor and Bitcoin along with the other Mag 7. We've been in 8 out of the 9 for many, many years. Yeah. And they are forever positions for us. Like we might trim them down. We might reduce our Apple exposure, but I'm never selling Apple. I don't care. I will hold it forever. It might be a small position in the hedge fund right now, but it's still a big position in my personal account because my cost basis in the personal account goes back to like 70 cents from 2003 and the stock's at 230.
Okay, but that's what for having bought in back then and you have it and it's like you're not going to lose to hold on, and then at whatever point it's like it still has the value based on what you got in at. But if you don't own it, so then John, the answer, we spend a lot of time studying other companies, and CrowdStrike right now is overvalued, but we snuck in and bought it 6 months ago at 270 or something. It's at 360 now, and like hopefully that's another multi-trillion-dollar company in 5 or 10 years. We're in a company called Transmedics. TMDX is the symbol. Let's see, Tommy, Mary, David, X-ray. And the company's growing tremendously. It's a transplant company. They've revolutionized how you keep organs alive to do transplants. And instead of taking 2 to 4 hours to get them into someone who needs a liver into someone who needs it, you can do 20 hours, 24 hours. And you just don't have the heart to sell it.
Okay. I'd like to be annoyed, but that was freaking funny, dude.
That was good.
That was well played.
That was good.
Damn, that was good.
Sorry. Okay. So yeah, so you're finding them, these ones that are like,
we're hoping we're finding them. I mean, that is our job.
Yeah.
So it's not like we just we're like, we only own the $1 trillion businesses now.
But if they got as enough of a potential to be like this 10 bagger in some X time frame or something, then it's like, I could take these two and be right about one of them, get out of the other one, and we're still okay.
And that's part of, I tell people when we were just touring the world, we went to Abu Dhabi, Dubai, and Hong Kong a couple months ago, and meeting investors and sovereign wealth funds and things. And that was what we, like when it came up, I would say, look, everybody has a superpower. One of my superpowers is holding on to my winners and selling my losers. And that is the job, John. That's exactly right. That we sell stocks a lot that don't work. And we try to hold on to the ones that we truly believe in and that are working.
So as we look at AI, and you
not always at the same time, by the way.
Yeah.
Sometimes we believe in them and they're not working, but we'll stick with it.
So like when we talk about AI and we try to get like a picture of the landscape, and I'm not an industry guru or something. I just work in AI. So I try to look at it from, I'm kind of like living in one of the trees and trying to climb my way to the top to be able to see the set of trees or something. But like I'm more down in the tree. And so one thing we try to do, I think, is say, oh, well, look at what's going on. There's all these like language models. And is it the creator of the language model, or is it the one who takes the language model and makes something out of it? Like, who's the one to get with? And so that to generalize that question, it's like, what are the types of businesses? Are there any new types of businesses that make up this new kind of industry? Because this thing, it didn't exist, the AI language model, generative AI industry. Now it's here now, and it's getting here, and we're like, oh, there's amazing things happening.
Again, a really good way of framing the discussion, Bryce, would you agree? Robotics is exactly what you're talking about. Like, robotics would not work without the LLMs and NVIDIA's chips and the CUDA platform and the ability to take video and process it, try to machine learn how, teach computer robots eventually how the real world works. And so, yeah, I mean, I think I do think there will be more value in robotics than there will be in LLMs.
The power, the growth year over year in capability for something like robotics is like monstrous. It makes this stuff of talking about the 10x growth in the stock and stuff like that pale by comparison. I wonder, is this a new thing? It seems to be that you have these things that are like science fiction level increase over previous years. You watch it go, and it's that whole AGI thing, and it's like, wow, the growth is so incredibly, like, I don't even know what it's going to look like next year.
John, what's interesting, one of the things that's interesting about where we're at this moment in time with AI is AI can talk back to you and can teach you about pharma. It can teach you about AI. It can teach you about any topic. You can learn a new language using AI. It can be a better teacher than probably most any teacher you've ever had. Meanwhile, a baby duck is born, or a baby miniature cow like I've got on my farm can be born. And the day that baby cow is born, it recognizes plants and other cows, and it's farther, like a baby duck is better in the physical world than the best AI.
For now. And the fact that these AIs are catching up so fast now.
Great point. Such a great point.
That that duck, 5 years from now will still understand things about as well as a duck. And these other technologies. So my question is about these other technologies like robotics and so forth. If we believe, and I do, that the growth curve in capability is insane, like we're talking a few years from now, it'll be 1,000 times more capable than it is right now, and so forth. If that's true, is there any parallel to what happens investment wise, or are investments are they more like the the power station where they're sort of just stuck at a certain level because of risk and so forth?
That's again a great question, and another way of framing it is how much is priced in to NVIDIA and or these other companies, and it's going to be on a case-by-case basis. NVIDIA, obviously, a lot is already priced in, as Bryce's analysis that I cited a moment ago would underscore. But is Tesla? If Tesla starts selling actual humanoid robots that understand the physical world, it's none of that's priced in. If Tesla starts selling full self-driving cars, part of that is priced in, but not all of it.
Well, I want to take a stock that I don't know if it's the right one or yet, but like say there's some stock you identify that's like right at the beginning of its growth and everything, and so it can track with just so we could say like it's not worth much right now.
The problem is that in this moment in time, there is no AI related stock, private or public, that is trading at fair value. None of everybody's like, throw a 10, throw a 100 multiple. No, throw a 500 multiple. No,
okay.
Whatever. I thought it was worth $2 million, but now that AI, the stock has gone from 19 to 38. Well, this should be triple that. I was literally on a phone call, going back to space for a moment. I was on a phone call with a space startup last week, and the two of the founders were like desperately trying to figure out how they should arrange their new round of fundraising. And they were stuck thinking 6 months ago logic. Like every space stock, every publicly traded space stock is up 300 to 700%. So you guys should be worth more than you were a year ago. Forget what you were looking at. Go pitch a double. See, go try to double the valuation. See how it goes.
Even if that stuff's ridiculous, or we come back to the Tesla, the robots aren't priced in yet, or something. You talk about things like 300%, 700%. I'm talking, okay, so that means 3 times, 7 times. And I'm talking still about 100 times, 1,000 times. So where does the disconnect for something gaining so much in capability and that not carrying over so much to value?
If that's the case, then Anthropic is still a buy, even though Amazon just gave them $4 billion at some ridiculous valuation. Bryce, your thoughts on this?
Yeah, I mean, I tend to think that the potential for AI, even outside of the LLM space, even though I think LLMs aren't necessarily slowing down as much as maybe other people do, is too big to not have your buckets in front of it. And I think I'm probably in the consensus on that with the VC world right now. And that's why these companies have the crazy valuations. But look, you have to, if you take the potential of what these products could do, whether it's LLMs or robotics or drones or any other form of AI, video models, right? The potential is just so big. And so if you model that out and say, okay, here's what this could do in a best case scenario, here's the odds I think that might happen. You've got to put money there, and you just hold your nose and you ignore the valuation right now and hope it works out. Now, that doesn't mean we can't have a pullback. That doesn't mean we couldn't go through a bear cycle like we did post 2000. But there were still some great investments made.
It's the cost of getting involed.
Yeah, and you may not get a post 2000 dip with AI like you did.
These again, it's good context, right? So let's go back to the year 2000. I'm glad you brought that up, Bryce. So Cisco is still below its valuation from the stock price from the year 2000. On the other hand, Amazon is probably up 20-fold. I mean, it did take 12 years for Amazon to get above its peak of the year 2000. So if you bought at the very peak of the year 2000 and never sold, you're still made a 20 bagger here. It's been great. Hopefully you bought some more when the stock dropped 98%, which it did. But even the price before it dropped 98% is lower than where Amazon is right now because, John, as you rightly are pointing out, like, in the year 2001, the year 2000, March 2000 is when Amazon hit its all-time high, and it was worth $200 billion or something, right? And then it dropped 98% to like $2 a share.
What triggered that?
The dot-com bubble crash.
Oh, 99?
And exactly. And it's like this current AI revolution, if it is a bubble, is not the same as the dot-com bubble. It's not like pets.com is out there somewhere, like like Webvan. John, who is the company that used to sell records, like infomercials on the you could go buy, or you could, it had all the stamps. KTEL. Remember KTEL?
Yeah.
KTEL in 1999 was like, hey, we just bought KTEL.com. The stock went up 15-fold that next month because they were like, oh, KTEL's going to finally make a lot of money. Well, it went bankrupt, but Amazon got above its high. And so, like, I think C3 AI is a short. I think it's stupid. I don't think the company will be here in 10 years. And if it is down 95% from these levels,
charlatans.
Yeah. Like, those guys are like grifters. Like, they're like, hey, we're AI and we promise.
Yeah. They're marketing and nothing else. Right. So,
but that doesn't mean that Anthropic isn't undervalued right now compared to where it will be in 20 years.
I think it probably is, because I think the thing that slows down the growth there in the is the demand slowing. I don't think it's really the demand or saying like, oh, you know what, we thought we were going to go process like crazy and now we're not, or something. No, that's not really it. There is perhaps a little traffic jam as people are figuring out how to kind of make value out of, but they will. And that's kind of mentioned in a different kind of category now, which is I was watching not an interview, but a panel, I guess, or whatever, of some folks from Y Combinator, but they were talking about, how agents, as this new thing you do with AI, are what the way that they're going to make it, you could think as being very similar to SaaS, and the kind of like one per vertical will own that particular vertical. And SaaS had how many unicorns?
Probably 50 publicly traded SaaS companies that are worth $10 billion. There's 20 of them worth $100 billion, and there's 2 worth $1 trillion.
That's about what they were saying. So that kind of level. So you're like 50 of these companies that have just done incredibly well. Many along. Wait, what's off track?
I don't know. Don't get off track. You on point. This AI boom is in the first inning. Notice Dan Ives is even Dan. I love me some Dan Ives, but I pitched Dan Ives Tesla at $20, and he waited till it was at 300 to upgrade it. But I do like Dan. I think his analysis has been fantastic for the last 3 years. So Warren buying Sirius XX, I don't think that's big. That is a small capish stock for Warren Buffett. He might be buying some of it, and
so
software like Midjourney is going to change the world like YouTube did. All right, I'm buying that comment. How about you, John?
I'll say software like Midjourney, but I just don't know if it's Midjourney. I'll go with more like software like who are the ones that doing the video? Runway. That's going to be. It's already starting to do stuff. So.
Josh Brown is missing Tesla as well. There's some guy on that show, Dan, what's his name, that's short Tesla? Dan Nathan.
So think of
a quick note real quick. Josh Brown, if anybody wants to Google it, Cody Willard, Josh Brown, he interviewed me in 2009 for his blog. And someone sent it to me about a year ago. I reread it. His questions were fantastic. And some of my answers were pretty good too. But it was a good interview if anybody wants to read it. Josh Brown.
2009. And you have to, as you're reading it.
I think if you put quotes around Cody Willard and quotes Josh Brown. Reformed Broker, I think was his blog. Cody Willard, Reformed Broker, you'll find the article.
Just got to keep in mind what didn't even exist at that point, because we're going way back in the past,
That article was mostly about the bank bailouts. and how I learned the lesson that turns out if the government sends $2 trillion to fraudulent banks like Goldman Sachs and Citigroup, the stocks will actually survive and maybe even go up.
So I was at this little tech conference, a small tech conference in Austin years ago. And the stuff that, you get little stuff being given away, like pens or whatever.
Swag.
The swag, and this one table had swag, and it was Enron notepads, and it's like it was legit, like the stuff that came from the company as leftovers.
That's cool swag, actually.
Yeah,
I would love to have an Enron notepad on my desk.
yeah.
Bill Gates is a short. Oh, Bill Gates is short Tesla. Yeah, famously. And he's lost billions doing it. And he ruined his relationship with Elon Musk, who rightly pointed out, if you're going to pretend that you're worried about the climate and you're going to short the one company that's doing more for the climate than any other company, then
in order to gain like 0.5% here or there on, like, why do you care? That was what he said.
Yeah, exactly. No, he like Bill Gates is literally short like $3 billion worth of Tesla stock. I'm not sure he still is, but he has been.
Yeah.
And you know what? Bill Gates is a short, right, Price?
I short Bill Gates.
Yeah, I mean, he's not running Microsoft anymore, but yes, I think Microsoft's probably a short.
And so is Billy.
Yeah.
Who owns more farmland in the U.S., Bill Gates or China?
I'm going to go with Bill Gates.
Yeah. Okay, so can I
got more questions? Josh, so bullish on Uber. Can't believe he doesn't see Tesla. We sold the Uber.
Yeah.
Because we're worried that I don't like to use the term hate. My 10-year-old daughter is not okay. I don't want her to say she hates things. So
Kalanick was on an AI panel as well. I was looking at, but what's he doing now?
He says China owns more than Bill Gates. I'm not sure that's true.
Well, then it's true. It take it down. He said so. So okay, what I was going to say. Tell me when I can go.
Go.
Okay. Is that if you think about agents, which are where you're using the language model to do things, not just answer questions, and they can talk to each other and carry through a chain, like a workflow, and you're going to get it to do stuff that's specific in the same, think of it as same kind of specific use cases as a particular SaaS company in a particular vertical, would do. Here's the one that does everything HR. Here's the one that does what Salesforce does. Here's the one that does what Workday does. Like down on the different SaaS ones that go, that's where they believe the growth is. So if you can find a good agent-based company that is beginning to own a segment of business, there could be something there.
Totally. I'm on your page. Bryce, thoughts?
Yeah, no, I agree. I do want to ask you, John, one thing. It's a little bit more technical, but Jensen talked about it on the call, and so I wanted to get your thoughts. Because there's this big question around whether scaling laws have slowed down, right? And that we talked about this last week, like whether we've hit a wall or whatnot. And they asked Jensen about this, and he said there's three kinds of scaling. There's pre-training scaling, which is kind of what everyone was focused on up to this point, and maybe that's slowed down. I mean, now he's talking about post-training, which is reinforced RLHF, reinforced learning, human feedback, and now
no, it's not the H, but it's
no. That's what it's about. That's his next point, John. Finish it, John.
And reinforced machine feedback, and then the third type of training he talked about inference time scaling, which I think is if you've used 401 from ChatGPT, you see that it now sits there and thinks for a little bit instead of just spitting out an answer immediately. And so
I might put that in the inference category.
Yeah, that's what he said. It's inference time scaling, right? And so he said that between those other two types of things, the scaling has not slowed down at all.
So the other OpenAI refers to the second one, not as the RL machine whatever, because RL machine feedback. They talk about it as testing. They say it's the kind of the testing stage, although the testing is a funny word because it's at runtime in actual use. So yes, I was going to say when you talk about a slowdown, the slowdown that people talk about is related to the first, the pre-training. And that yeah, so maybe it is, but it's also the slowdown is parallels the fact that that's not where they're seeing the gain. So they're like, okay, we got that gain. The next gain comes from what happens during runtime, during test time, when the question gets asked and it goes through all these steps and it has to do whatever. It needs the processing as well, and it's the same kind of processing as far as the chips are concerned. And then you've got like, well, what are the cases that drive the need for more real time, like video, the real time audio. These kinds of things are like, you can't wait around. You need millisecond response, but it's still doing generative. There's now a thing which will do like a video game where you can like steer it a different direction. And it is like,
it's in real time generating,
frame by frame generating. We're only talking, I don't know, maybe it's 10 frames per second or something. It's a little choppy.
But again, it's like, if we'll fast forward 3 to 5 years, it's going to be an entire video game doing that's unique to the player who's playing it.
Which means like we haven't even invented we don't even know what all the uses of this stuff are yet.
Now that is the most bullish part of AI. Bryce, what was that part you wrote today where I was like, take it from tens of thousands to maybe millions? Like, go ahead.
So we were talking about where I could go, and we said, look, here's where we think it could go, but then we know there's going to be thousands, tens of thousands, millions of other applications that we can't conceive of right now, and those, in our view, are all going to be, most of them are going to be built on NVIDIA's chips.
And they're going to have a demand for inference, for whatever, for processing in the same way as anything else does. Like, we know that. But like, it comes back to my question. I don't know the answer to. I don't know if I understand what the answer is, which is, if in the world this thing gets created, that this set of technology that heads us toward like the singularity, it's just so fast how it's taking off, then it doesn't match what a market typically does. And does the market keep up with it? Can you actually go up 1,000 times in wealth because the thing went up 1,000 times in this? Or is this the function more like flattens out and you can only do so much?
I never say never. I mean, the part of there's a dual thing that's happening with AI. It's both going to grow the GDP pie globally, which in that case, it shouldn't have the D. It's GGP. Gross global product.
Yeah.
Thanks. And likewise, it's creating efficiencies inside of existing revenue streams, and will make Coca-Cola more profitable. It'll make GE more profitable. It'll make First Solar more profitable. It'll make Rocket Lab more profitable over time. And so and it's like, when that happens, I mean, if you can create bigger revenues that are more profitable, then yes, I mean, there's trillions of dollars of economic prosperity that are going to be flowing through the system in 5 years or 10 years from now that were not even possible.
But can I honestly see, does it really translate? Can I honestly see buying some security and they're like, okay, like the time has passed, that thing paralleled what was going on with the technology, and my stock went up 1,000 times.
That's the dream.
Is it real?
I mean, NVIDIA's up 1,000 times for me.
Oh, okay. Yeah, I guess it is. I guess it is real. Yeah. So there are examples. There are examples of it. Like somebody said, this is more an economy thing than an investment thing. But it's like, somebody back in 1910, if they went to like buy an avocado, it would cost
$28.
No, $100.
Yeah. Like a lot, and that's not inflation adjusted. If you wanted to eat an avocado in rural Kansas in the year 1917, it's going to cost you a lot of money.
A lot of money. And so what you talk about is like the I don't know whether it's deflationary or it's more the expanding out of the possibilities of things and what we all have. It's like the phone I have is certainly worth it has more value to it than everything Napoleon owned in his time.
It has more value in it than the entire Apollo space shuttle.
Which is even closer. Yeah. And it's that's So that stuff keeps happening too. That doesn't help me,
Yeah,
with
John,
my portfolio.
I just want to temper everybody watching this, temper the bullishness. Let's tamp down a little bit. I appreciate you watching ETH for peace, but I'm going to use a couple other ones here. NVIDIA is many things, but it is not undiscovered.
That's right.
Palantir, I think it might be perhaps the most overvalued company on the planet that's not a fraud. Not even sure it's not a fraud, but if it's not a fraud, it's definitely overvalued. I don't think it's a fraud, but I'm not sure it's actually going to be as well positioned 5 years from now as everybody thinks it is.
It's got it already built.
People aren't factoring in this AI thing. Yeah, I agreed on that. We're on that page. Event Horizon. Is that a movie? I don't know.
Well, it kind of talk about the singularity.
Oh, all right. Palantir is here. You can now say never. I don't think that's true. I think Palantir might be in trouble. I'm not sure it's a good valuation here at all.
I think they're.
I appreciate you loving Rocket Lab, but Rocket Lab is definitely overvalued at this moment. Doesn't mean it won't keep going up.
Doesn't mean it's bad. Doesn't.
Archer. I feel comfortable wanting to short Archer and never buying Archer. I think that will be a zero within, say, 3 years.
What is the time frame when you short it? How long do you get to?
You don't ever have to cover a short. I've been short a company that changed its name. I can't think of the new name, but I've been short a company in my personal account for more than 10 years.
And it doesn't expire.
No.
Okay.
I mean, if every shareholder of that company said, "Don't lend my shares out," told their broker firm, then I could get a phone call from my broker and like, "Hey, I have to buy your shares back." But the only problem with that is I'd end up paying taxes because I'm up 99% on that short.
By the way, we've got another meeting at 4, just FYI.
All right, 2 minutes.
Okay, so
Here we go.
I got one thing I wanted to say.
NVIDIA, once again, not undiscovered. Many things, ETH for peace, but not undiscovered.
Okay, wait.
He's being funny. Okay, fine. But no, NVIDIA should not be 250 already. It's just, ETH
So one thing.
peace, bring it down a little, bro. Just temper your bullishness. This is not the time to be like a year ago. These texts might have been better received by me, but I'm worried about a lot of these small caps.
Okay, I have 1 minute. So like, I have 1 minute. Here's my thing. So saying about, I was talking about agents and that being something to watch. Something to watch in AI. Something to watch in AI, in how it gets used, etc. In general is, and this is a little bit the flip side of are we going to fire people because of this? Is how close are we to somebody being able to start a company and get to like make $1 billion company without hiring anybody? Like it's you and it's the agents that are doing stuff for you.
I bet that's happening right now. There's someone not in a garage, maybe in a trailer park, maybe in their parents' basement. But yeah, there's absolutely people building multi-billion-dollar companies that will be worth multi-billion dollars and might have less than 5 employees.
That's a big statement, but you may be right. That's the thing I wanted to mention. Okay. That was my last word.
All right. First time here, got excited. ETH for peace. Appreciate you being here. ETH for peace. Too legit to quit. Too legit. I'm too legit to quit. Peace and love, everybody. Thanks for being here. I guess Bryce and I have another probably not so important call, but we're going to go get on it. Thanks, John. Appreciate your time, brother.
Catch you later.
See you guys.